Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Since the Australian dollar advanced to a multi-month high at 69.29 and twice that is, as you can see here from the previous rejection, is that the market bulls have struggled to recapture the momentum to support any bullish call beyond the level of the resistance of 69.25.35. Although the Australian bulls are persistent in tackling the top side, it would seem now from a technical aspect we're breaking down duly to the bearish divergence, and also with the RSI breaking under the midway point of 50 and not too far away from marrying up to the RSI MACD marriage. So from there we should see further weakness from a break of 68.60. If so, then we are looking down towards 68.25 with the objective where I've outlined here as 67.70. Any renewed advances expected to foul. With the dollar index posting fresh highs around 97.78, it is actually expected to see further risk to the downside when it comes to the euro. Now, if you have a look at the price action, is that we've had a retreat from the level of 111.80 to 112.15. We've got a bearish outside range day confirmed, and now posing a threat to this level, as I've outlined here, of 110.65. If it can take out the level to the downside of that 110.65, then I'm looking down to 110.15 to 109.50. Any advances should still continue to find weakness towards a level of 111.35. The dollar yen has clearly retreated from that level of 109.20, and from that the support is now coming back into focus at 108.65. This level has only seen minor, as I feel the market should get back on the pathway to the bearish case and look down towards 107.85 to 107.15. What triggered the safe haven demand once again is the markets talking about the United States and China might delay signing the phase one of their trade deal until December, as discussions continue over the terms and a venue. A person familiar to the China negotiations have said to Washington that all tariffs need to soon be removed. That is, the tariff that was dropped at 15% on 125 billion worth of Chinese goods, and then also 25% on tariffs of 250 goods. And now December 15 poses another round of tariffs of 156 billion. So let's see what happens there. Nevertheless, the market is retreating from this level, 109.20, and I do expect to see the market take course after you can see the rejection from there back towards the downside. Little to report to the pound as it holds inside this range of 127.75 to 130 to 130.50. The technicals are breaking down, and I do expect to see eventually a challenge of the level of 127.85. A break beneath there would give a scope towards 124 as a target. But we do need a little bit more confirmation to this pattern, but it's slowly increasing to the bearish case. Gold recovers slightly after its plummet the previous day, but nevertheless has found support in the interim close towards 1,482. I do expect to see further weakness because although safe haven demand is coming in, the pattern is still very much in a noise band and most probably like to trade in a 76 to 16 range. Little more can be said until I see the weeklies come in with a bullish trend from the ADX, which isn't there at the moment. Wrapping up with oil, well, there was a long-legged doji, gave some indecisiveness, and then from the outside range they posted last night, after rejecting from the third challenge, that is, of 57.55, bears are looking back to see a move to possibly to 55.10.15. It's only a break from there would confirm the downside to $54 a barrel. Nevertheless, the market can stage a recovery soon and negate this outside range day, so we do need confirmation. Well, that wraps up for today. Thank you very much for joining me. And as always, look out the intraday report and I hope you enjoy the great start to this new day.